Good evening everyone. So market took a meaningful hit today as investors shifted firmly into risk-off territory. I would say that the main catalyst is the renewed trade tension after President Trump renews his threats of 10 to 25% tariffs on several European countries, linked to the Greenland issue obviously. In addition to that, we have this dramatic move in Japan, where the long-dated government bond yields surged to all-time highs, with a 40-year one crossing 4% for the first time in a long time. This raises real questions about fiscal stability and global liquidity. But how does this affect our companies like AMD and Intel? So for quite a while now, I've been talking about Intel and AMD in a future where both of these can be the winners. And you can see that AMD stock rebounds essentially after the early dip of 4%. And again, when it comes to Intel, it's also finished actually on the green after the price target increase. And one of the main reasons from this analysis that Intel 18A marks the return to Moore's Law process path. They also mentioned that the positive feedback from OEMs at the CES, Intel gaining share in consumer and enterprise PCs, and of course the IFS, which is the packaging side, gaining momentum in advanced packaging. And you can see here that clearly that Intel had a good day, 3.6%. Also AMD managed to turn the 4 to 5% red numbers to a positive one, although not a big one, but still positive amongst all the others. Like look at TSM, Broadcom, Nvidia all done 4, 5, 6%, SMCI 4.5%. So if we start with Intel, I've been saying that let's not look at the revenue numbers. Recently I stopped to follow the revenue exactly. I will maybe start to add them again, but it's not about the revenue currently. What we are investing in Intel is investment in a future competitor to Taiwan Semiconductor manufacturing, right? Which is currently valued at 1.7 trillion, which is the second biggest semiconductor company on the planet, just only after Nvidia. And in my opinion, everything points to the right direction. Intel is gaining momentum. Intel might not be there yet, and they won't be at TSMC's manufacturing capacity for many, many years to come, if ever. But the idea is not to replace TSMC. The idea in terms of investing in Intel is to have a competitor to TSMC. And Intel 18A gives Intel the tools they need in order to compete with TSMC. And I do believe that there's simply too much pointing in the right direction, and this is the reason why we start to see like price target increases where analysts all of a sudden are talking positively about Intel. And remember, still, like even a price target of 65, the market capitalization of Intel is at 230 billion, which is peanuts compared to Nvidia and TSM, right? And even Broadcom and even ASML. So there's a lot of potential with Intel. Now, if you only look at the revenue numbers and look at the potential profits for the up and coming year or two, you'll miss the boat because Intel won't make huge profits in the near-term future, right? That's not why you should invest in Intel stock. You invest in Intel stock the same way that you invested in AMD stock 10 years ago. The profits wouldn't have necessarily come on like already in 2016-17, but it was clear for everyone to see that AMD was going in a complete different path. They were getting market share in server CPUs. You're investing in the story, not necessarily like the current financials as it stands today. And if you only look at the financials as they stand today or in the up and coming year, you most of the time miss these like once in a lifetime opportunities. Now let's go to AMD. We always talk about AMD and we are looking at, let's say, the GPU recently, like the AI GPU sales, right? And I understand that because that's what everyone is talking about. Large language models like ChatGPT and Grok and all these like tens of billions and hundreds of billions of dollars investments into AI GPUs. But for this video, I thought we might have a look at the other segment of AMD, which is like the EPYC server CPUs. And for my modeling, I'm looking at just below 10 billion or so US dollar when it comes to AMD EPYC lineup. But I'm starting to think that this 10 billion is kind of a bit too conservative for 2026. Why do I say that? Well, you can see that 2024, AMD doesn't break down these numbers, but we know like relative to their, let's say, AI GPUs, how much of the combined server lineup for AMD is GPUs and CPUs. So I came to a conclusion that in 2024, they sold around 5.5 billion in AI GPUs and 7.5 billion in server CPUs. Last year in 2025, we still have yet to get the Q4 numbers, but I'm estimating around 7.5 billion in the AI GPUs, so getting closer to take over the CPU side, but still the CPU side probably was the better one, just below 9 billion. For 2026, obviously the AI GPUs, we know that it will completely skyrocket, and you can see it better maybe in my chart here. You can see where the red numbers are the server CPUs and the blue ones are AI GPUs. And at some point in late 25 and early 26, we will see this skyrocketing of the blue bars like leaving the red bars in the dust. But still, I would say that the red bars are significant. These are like, again, high margin products for AMD. And I would say that with the recent rumors that both Intel and AMD will start to raise their prices in their server CPUs. We know that Dell and HP and Lenovo are already started to raise their prices on the consumer side. And with the like booming market of AI and PCs, I would say it's very unlikely that Intel and AMD wouldn't raise their prices in the CPU side. So my conclusion is essentially based on the fact that AMD is amongst Apple, one of the first two big companies tapping into TSMC's 2nm, and we know that 2nm is ramping up very, very quickly compared to the previous nodes like 3 and 4nm. So I would say that there's a lot there actually that the market is mispricing, and potentially even I, and in my model, maybe a bit too conservative. I know that long-term wise in the server CPUs, it's going to be much more difficult for AMD to gain market share against Intel, because Intel is starting to get to a complete different level when it comes to their technology. I mean, they're going to be much more competitive with AMD going onwards from now on. But still, I would say that the general market is growing so fast in the server CPUs that people are like missing the boat. Like everyone focuses on AI GPUs and have forgotten that all of these like back-end server CPUs has been like neglected maybe for 3-4 years now due to the AI GPU investment. Because if you're Google, or if you're, let's say, Meta, or you're Amazon or OpenAI, right? You're much likely putting your dollars into AI GPUs in order to have the best language model, like the best ChatGPT, the best Grok. You might have neglected your CPU side. And I think we are really going in a market where the server CPUs might have been slightly neglected. And in addition to that, the demand on the CPUs is increasing. So we are probably going into a bull market for the like general purpose server CPUs. This is why I think like AMD is really also really nice investment currently. Again, the market cap is currently at around, let's say, 370 billion. But I'm expecting that AMD makes significant margins this up and coming year. I mean, in my model right now, I'm looking at anywhere between 7.5 to 8.5 US dollar earnings per share, depending if you look at the GAAP earnings or non-GAAP earnings. But even if you say in slightly more bullish scenario at 8.5 to 9 US dollar, the current stock price is just around 230 US dollar, right? That's nothing. Like if it's essentially less than 30 times PE ratio if you count for 9 US dollar earnings per share. If I increase the server CPU revenue for 2026 from my less than currently 10 billion to around 12-13 billion, this will for sure increase the, let's say, margins for AMD and for sure the earnings per share. And that would probably push the earnings per share north of 8.5 to 9.5. And in that scenario, I still think this company is way too cheap, because this is 2026. I'm not selling AMD this year, right? I'm looking already at 2027. And there, even yet without the increase of server CPU market booming potentially, excluding all the other conservativeness of this model, right? I mean, I'm still looking at our earnings per share of 11 to 12 for 2027. In best case scenario, maybe even a 15-16 US dollar earnings per share for 2027. And if that reality comes true, then this company is way too cheap. Like this should easily at the current stage be at 400 US dollar, 500 US dollar in my opinion, if we reach those kind of potentials next year. But let's wait and see. I'm not saying that this company should go to 500 now, but at the very least, I think 350 is like where it should be traded out. Now, I also like to look at one other option there, because I've been mentioning this company for a while now, and it's ARM. You know, the company behind the new instruction set competing with x86, so ARM64, which your mobile phones, so a lot of laptops and all this kind of stuff is running on. And traditionally, I've seen this company as a little bit too overpriced over the past year and a half. I mean, when it was like at, let's say, these prices of 175 or anything above 140, I think it was just a pie in the sky. Now, it's still quite expensive, or at least it's richly valued for, let's say, next year's earnings, right? Forward price to earnings ratio. But ARM is also in such a unique position that you would pay more for ARM than, let's say, like even AMD or Nvidia, like in terms of they don't have any real competitors out there right now, and all of like billions and multiple billions of phones each year are sold based on ARM, and they get royalty for these devices, and they in addition develop new devices. So I think when it comes to ARM, I'm not saying that this is the worst time to buy it now. I would still say it's slightly too richly valued, but how many times have we been there, like waiting for the correct price and it's just like never goes down. I mean, even if you say you would rather buy it at 85 to 95, sure, it's still a 10 to 25% decrease in price potentially, but we never know if that price will come. So I would say that at least based on the last 2 years time, at the very least, I would say this price is much more realistic for me to buy at than, let's say, 150, 140. And if you look at the 5-year chart, you can see here that we are close to the lows. Anything beside like the pop-up in the early after the IPO, if you exclude that like before 2024 kind of price, you can see here that, we are very close to the lows of that time. And I think like with the making roughly of 400-500 million US dollar quarterly earnings every single quarter at the very minimum, we are looking at a 2 to 2.5 billion US dollar company of earnings every single year within a couple of years, right? So it's not the most expensive, like 40-50 times price to earnings ratio for a company like ARM. I think at least it's reasonable, but I would say still that AMD is my bet here, and Intel. So yeah, that was a quick update. Thanks for your time. Please like and comment, and see you in the next one.